Hey guys, it's Eric with Low VA Rates. It's a beautiful Friday. I'm wearing red. I hope you are too. Speaking of red, down there to your right is a subscribe now or follow button. Whatever you do, please, if you're watching this video and you like it, make sure you subscribe so that you can quickly get access to all of our videos the moment they come out. We're always sharing every Friday information that either has been asked of us during the week or that we know is important. So it's very likely that you're going to be interested in these topics. So why not know about them as soon as they come out? For example, today we're going to talk about VA streamline closing costs and what you can expect. We have so many videos out there about VA streamlines. We also refer to the VA streamline. The technical word is IRRRL, interest rate reduction refinance loan. But these VA IRRRLs or these VA streamlines, they have closing costs. Right? We don't hide that. Loans have closing costs, and we want to talk about those today. Since the IRRRL is our most popular loan program, we want to cover everything you need to know about it, including closing costs, what they are, what can and can't be charged, and how they're different from other loan closing costs. That's what we're going to talk about today. So, what are closing costs? Well, it takes a lot of people and a lot of work to complete a home loan. And closing costs are one of the ways in which we can gather fees or we can collect fees to help cover overhead and expenses. All right? Closing costs include anything above and beyond the home's purchase price or balance on a refinance. So when we talk about closing costs, we're talking about things like, let's see, origination costs. You guys have all heard of an origination fee. I assume that's very popular. How about a credit report? You know, to get a loan, you're going to have a credit report. Those credit reports are not free. I'm not going to tell you exactly how much we spend every single month, but when you're doing thousands of loans a month, you're probably pulling credit on 2,000 some odd people. Every single time there's a credit report pulled, we are charged money. Now, here's what's great about being a veteran. If your credit report invoice that is in our hands is $20, that's all you're going to be charged for a credit report. Conventional loans, we could charge you $100 for a credit report. We wouldn't do that here at Low VA Rates, but the regulatory protection for civilians is not there like it is for veterans. So you'll never be charged more for your credit report than the actual hard cost. We go in the hole every single month on credit reports because we pull credit reports on a lot of people that don't actually end up closing their loans. That's one of those expenses that we talked about at the beginning for owning and running a mortgage company. Now for VA loans, there's additional closing costs like the VA funding fee, right? Unless you're a disabled veteran, we've got videos on the VA funding fee, but all VA loans have a VA funding fee, and that fee is waived if you're a disabled veteran. This is not a fee that helps us cover our overhead or our cost to originate your loans. This fee goes directly to the VA, and it helps them keep the VA home loan program running for future service members. So let's talk about closing costs on the VA streamline. These are obviously part of them, but VA streamlines have both what we refer to as allowable and non-allowable closing costs. And this concept of allowable and non-allowable closing costs is pretty unique to the VA loan program. Some allowable closing costs could include, and this is not all encompassing, so these are most of them. We talked about origination costs. On a VA loan, one allowable expense is up to, or one allowable closing cost is up to a 1% loan origination fee. Can't be any more than that. It could potentially be less. Also, your VA funding fee, which we talked about on a streamline, is limited to 0.5%. So it's greatly reduced on VA streamlines. Now, there are other fees that are not completely unique to VA loans, like recording fees, title insurance, title exam, perhaps recording, prepaid taxes and insurance. I'm just kind of winging it here. Flood reports, credit report I've mentioned. Maybe you decide to pay discount points to get your rate lower. All of these start to add up, and the amount for each of these fees may vary from lender to lender, with the exception, again, of that funding fee. But your title company fees, one lender might use title company A, one lender might use title company B. So it's important to look at those title company fees And do all companies have to charge a 1% loan origination fee? Not necessarily. Here at low VA rates, we do charge a 1% loan origination fee as a very typical closing cost in our VA streamlines. Now, lenders are allowed, based on the VA guidelines, to either charge this as one flat fee, or they can forego that and they can itemize it out. We'll get to that here in a minute. The list of itemized fees can now include some of the fees that otherwise would have been known as non-allowable. So it's kind of tricky. Veterans will sometimes come to us and say, hey, look, I read the list on the VA's website of non-allowable fees. And I have a lender over here that I'm using to compete with you low VA rates, and they're charging me an underwriting fee. You guys aren't charging me an underwriting fee. Why are these guys charging me one? Now, if I wanted to be misleading, which I never would do here, and I mean that sincerely, I would say, well, then don't go with them because number one, they're charging you an underwriting fee. And as you're very well aware, that is a non-allowable expense. We're not charging it, so you should come with us. We don't charge underwriting fees on our VA streamlines. But the reality is, if they're not charging you a full 1%, I'm going to do some math here. I like to keep it simple. Let's say your loan amount is $100,000. Well, what's 1%? It's $1,000. So one option is to charge you a $1,000 origination fee. But if there is no origination fee, we could charge you a $500 underwriting fee. That's non-allowable. Based on the list, we could charge you a $500 processing fee. Guess what? Processing fee is also non-allowable. But you need to understand, if you're not charging the 1% flat origination fee, you can charge to the veteran all of these otherwise non-allowable expenses and closing costs as long as the sum total of all of them does not exceed 1% of the loan amount. So a lender may choose to itemize them out. Most lenders are going to charge you a 1% loan origination fee. Let's talk about some of the stuff that you're not allowed to charge. Non-allowable. There's a whole list online you can find. Again, if they are charging you the origination fee, okay, you better not see any of these fees being charged to you. Application fees, processing fees, underwriting fees, doc prep fees, settlement fees, notarization or notary fees, tax service fees, lock-in fees, basically all these fees, and you can find the list. Hopefully the team will put a list of these in the description box below, or you can go find one of our videos on non-allowable fees. If there's origination fee on your loan, you better not see that list of fees that I just said. And if you want your complete list, other than calling us and getting it from us, you can always call your VA Regional Loan Center. Their number is 877-827-3702. We'd be happy to give you that list, okay? Now, it is possible to see a list of estimated closing costs before choosing your lender. 100% you should be getting that before making that decision. In fact, even after you've chosen your lender, you're going to normally have at least 2 opportunities during the loan process to review your closing costs and make sure you're only being charged what you're allowed to be charged. Number 1, after your offer on the house is accepted and you go under contract, or if you're refinancing, the lender should be giving you an initial loan estimate upfront very early on in the process. The second time is at least 3 days before you close your loan. You should also be getting a closing disclosure or a CD. Both of these documents should list all of the fees the lender is planning on charging you. The LE is considered exactly that, an estimate, while the CD, LE, loan estimate, CD is a disclosure given to you at closing, 3 days before closing, the closing disclosure, and it is much more finalized and does not have the ability to really change. So like I said, if you're looking at your CD 3 days before closing and you're comparing that to your LE, make sure that nothing major has changed when reviewing those documents. If there are discrepancies or you simply just have questions or some sort of red flags going off in your head, get a hold of your loan officer, get answers to those questions before you go all the way to the closing table. By law, some things can change between the 2 documents. There are other areas that are not allowed to change, not even a penny. So it's worth making sure you ask questions if you're not certain. Your loan officer should be able to offer you a reasonable explanation of the changes, and if they can't or something sounds suspicious, even if you're not going with low VA rates, call us up. Let us make sure that you're not being taken advantage of or that an error is not being made, even innocently, so that you can know with certainty that you're getting the deal that you should be getting. Now, are there other red flags that you should look for? The main one goes back to this whole explanation I gave you at the beginning, and that's that 1% origination fee. If you're being charged an origination fee, make sure that list of non-allowable fees and charges, like notary fees, underwriting fees, processing fees, better not be charged also. Okay, that would be wrong. Again, if you see that, it might be an innocent mistake. Bring it up. If it is not fixed, you should probably do something about that before you decide to sign your loan documents. Now, what do you do if the lender is charging you non-allowable fees and that origination thing, and that origination fee? The first thing you're going to want to do, let them know. It could be an innocent mistake. We've made mistakes here at low VA rates. Others might make mistakes. Now, if it was intentional, tell them that these fees are unallowable and they need to be removed since they're charging you that origination fee. If that fails, then hopefully you've been shopping around and you still have enough time to work with a different lender who understands the VA loan process and gives you more confidence and trust. Always shop around and always put low VA rates into that mix so that we can also give you our best potential offer and let you do that before you make a decision. How do you pay for these closing costs that we've just talked about when doing a streamline? Well, before you go to the closing table, you're going to need to figure that out. You've really got two options. And the one that 99% of all of our veterans choose to do, which is super cool on VA streamlines, is they just roll those closing costs right into their loan. That way they don't have to come to the table with any cashier's check or any funds or any money. You just roll them into your loan and you don't have to worry about it. The second option, which doesn't happen often, but if you happen to have cash laying around or you've got additional savings somewhere in the bank, you can just pay all your closing costs right out of the pocket. You can come to the closing table with a check. We wouldn't suggest coming with cash, but basically your two options, let's keep it simple, roll them into your loan or pay them out of pocket. Those are the two ways in which you're going to be able to cover these closing costs on your VA streamline. Can't do that on a purchase. Can't do that on a cash out. Well, you might be able to do that on a cash out if you haven't maximized the amount of cash out that you're pulling. Hopefully, any questions you had about closing costs, specifically as it pertains to a VA streamline, have been answered today. If I've missed something, always go and comment in the video below. We get alerted the moment these comments hit the website, and we try to respond as quickly as we can. But you should now be very, very close to an expert on the closing costs and how they are, how they're paid for, and what can be charged to you on a VA streamline. If you have an interest rate in the 3s or even the high 2s, consider a streamline. Give us a call. Thanks for watching. This is Eric, and we will see you next week. I'll be wearing red. I hope you will be too.